Is it time to sell everything? Gold, Bitcoin, the S&P 500? Many are feeling nervous, but in this video, I'll explain exactly why selling now could be a huge mistake. I'll also break down Michael Saylor's controversial strategy for homeowners and what Donald Trump's proposed $2,000 check could mean for your portfolio. The market is currently in a state of extreme fear, and for a contrarian investor, extreme fear often means one thing: it's time to pay attention. But there's a hidden threat to the AI boom that almost no one is talking about, and it could put a stop to this incredible rally. Let's start with the big picture. Why does it not make sense to be bearish on gold, Bitcoin, and the S&P 500 right now? 3 reasons. First, that extreme fear sentiment I mentioned. When everyone is scared, it often signals we're near a bottom. Second, the medium and long-term trends for assets like Bitcoin and the S&P 500 are still clearly pointing up. And third, and most importantly, liquidity in the US is improving. More money in the system tends to push asset prices higher. Governments continue to demonstrate massive fiscal indiscipline. This means they are spending a lot of money they don't have. While that's a long-term problem for the economy, for investors, it's like fuel for the fire. All that new money has to go somewhere, and it often flows into assets like stocks, gold, and Bitcoin. If you want to stay ahead of these powerful market trends, make sure you subscribe to the channel so you don't miss the next update. Now, let's talk about a strategy that's turning heads from Michael Saylor, the CEO of MicroStrategy. His company has been issuing debt and stock to buy billions of dollars in Bitcoin. He is betting that the value of Bitcoin will rise faster than the cost of his debt. Essentially, he's using leverage to bet on currency debasement. MicroStrategy stock, ticker MSTR, had a big correction recently, but it looks like it has found a solid floor and could be ready to climb again. So, how does this apply to you? Saylor suggests that young people buying a home could consider a similar idea on a much smaller scale. Instead of putting every last dollar into a down payment, maybe a small portion of those savings could be invested in an asset like Bitcoin. It's a high-risk idea, but it's food for thought. This brings us to politics. Donald Trump has proposed a $2,000 tax deduction. Whether you agree with it or not, as an investor, you have to analyze its impact. A move like this would inject even more liquidity into the economy, more money in the hands of consumers. Some of that money will be spent, and some will be invested. Sectors that could benefit from this type of stimulus include defense, artificial intelligence, and rare minerals. And later, I'll tell you why that artificial intelligence part comes with a huge warning sign. This market rally feels great, but is it sustainable? The hype around AI and tech is off the charts. Companies like Meta are pouring billions into data centers. But here is the problem no one is talking about: electricity. AI is incredibly power-hungry. In Nvidia's own hometown, data center projects are being delayed because there isn't enough power to run them. This is a massive bottleneck. You can have the best chips in the world, but if you can't plug them in, they are useless. Even Taiwan Semiconductor, the company that makes chips for Nvidia, reported slowing revenue growth, raising questions about whether this AI demand can continue at this pace. So while demand for Nvidia chips remains sky-high, the infrastructure to support them is seriously lagging. Finally, a quick look at 2 companies on opposite ends of the spectrum. First, Beyond Meat. This company is a clear one to avoid. They have postponed their quarterly results for the 2nd time, citing significant deficiencies in financial controls. If a company can't even get its own accounting right, you should stay far away. On the other hand, a viewer recently mentioned owning PepsiCo, calling it boring but with strong fundamentals. And that's a great point. In a market full of hype, owning solid, profitable, and stable companies can be a fantastic long-term strategy. So to recap, the trend for major assets remains bullish thanks to liquidity. Don't let fear shake you out. At the same time, be very aware of the real-world bottlenecks facing the AI sector, like the lack of electricity. The hype can't outrun physical limitations forever. If this analysis was useful, do me a favor and hit the subscribe button. It's the best way to support the channel. Now, I want to hear from you. If you received a $2,000 check tomorrow, what would you do with it? Spend it, save it, or invest it? Let me know in the comments below.